In the noisy and fast-paced world of startups, where companies burn through cash for marketing and struggle to turn profitable, one Indian startup stands out by doing just the opposite. This very company went from zero to $1 billion valuation with zero funding and zero marketing. Can you guess this company? I've given you enough hints so far. It's none other than Zerodha, a financial services company which skyrocketed to fame and transformed the Indian broking industry, becoming a household name in India. In this video, we will uncover the remarkable story of Zerodha and its humble journey from zero to hero. We will explore how the Kamath brothers ventured into the broking industry and made a lasting impact over the years. We'll dive into the company's business model and financial performance. Next, we'll discuss how Zerodha is competing against its peers and navigating future growth amidst new SEBI regulations. Finally, we'll wrap up with some key takeaways. Let's get started. You're watching Informed Investor, an initiative by Equent. Zerodha was started by two brothers hailing from Bangalore back in 2010. But the story isn't as straightforward as this. Both the Kamath brothers had a fascination towards the stock market, especially that of trading, starting at a very young age of 17 years. While they admitted they faced significant ups and downs in their journey, they made each move as a learning opportunity. While the younger Nikhil is known to be an excellent trader, the elder Nitin soon wanted to start an entrepreneurial journey after his stint at Reliance Money, a brokerage firm back in the day. And in Nitin Kamath's 15-year journey of trading, he discovered a business opportunity along the way. So basically, traditional brokers, though running online platforms, were relying on an offline method to run it. For example, maintaining hundreds of branches, sub-brokers, relationship managers, regional heads, zonal heads, and many more to serve clients who were all going online. And this increased the cost of running the offline business was being passed on to the trader. Nitin Kamath noticed the significant inefficiencies and high brokerage fees that discouraged many from investing. Along with the younger Nikhil, the Kamath brothers decided to create a solution. And in 2010, Zerodha was born. The name was created by the fusion of the English word zero and the Sanskrit word rodha, meaning barrier. Together, zero barriers reflecting their objective of offering discount broking, which means it charges a reduced commission or extremely low brokerage on the transactions to ideally attract investors to use this platform. In his words, Nitin says, becoming an entrepreneur is not just about starting a business. It's about finding inefficiencies and creating solutions that make life easier for people. And interestingly, Zerodha had the first mover advantage as it was the first discount broker in the country and also used technology to add value. And in just over 3 years, without spending a single rupee of advertisements, newspaper inserts, Google ads, etc., they amassed 30,000 clients contributing volumes of rupees 4,000 to 5,000 crore on the stock exchanges daily. The Kamath brothers believed in word-of-mouth advertising by their clients. But apart from this, they were solving three main hurdles with Zerodha. First, as we mentioned, was the extremely high brokerage fees and introducing themselves as discount brokers, charging 0 rupees for equity or long-term transactions, followed by a small 0.03% of the value of transactions or a flat 20 rupee, whichever is lower, for intraday and F&O traders, and lastly, zero charges on mutual fund investments. Second was the lack of knowledge and awareness of the stock market. And to tackle this, Zerodha launched its Varsity, a series of comprehensive and simple ways of educating investors and making them aware and confident of investing. Additionally, they integrated several apps like Sensible, Tickertape, Smallcase, Screener, and several others to provide value to enhance the investment experience for its user base. Lastly, the third hurdle was the tedious and complex process of investment. Zerodha introduced a platform and later a mobile app that made it seamless and easy to understand and track their investments in the financial journey. And in 9 years, in 2019, Zerodha replaced all biggies like ICICI and HDFC Securities, Sharekhan, etc. as the largest broker in India, amassing 8.5 lakh clients. But this was just the tip of the iceberg. In 2020, two things happened. Firstly, the unexpected onset of the COVID-19 pandemic in early 2020 brought about significant disruptions to daily life and economic activities worldwide. In India, the nationwide lockdown imposed to curb the spread of the virus led to a dramatic shift in people's habits and behaviors. And guess what? One of the most notable consequences of this period was a surge in interest towards the stock market investing and trading. If you can see the image, the surge in interest led to massive growth as many new customers opened Demat accounts through Zerodha. This also led to Zerodha becoming a profitable unicorn startup, and mind you, one of the only few profitable unicorns. The spectacular growth is also reflected in Zerodha's revenues and profits. If you see the image on the screen, Zerodha has continued its tremendous financial track record in terms of both revenues and profitability. For fiscal year 24, revenues grew 21% to 8,320 crores and the profit grew by an impressive 62% to 4,700 crores. So by the numbers, Zerodha is India's largest discount broker in revenue, and its huge profits mean that its operating margin stands at a massive 57%. What's even more astonishing is the profits do not consider the unrealized gain of a massive 1,000 crores. These unrealized gains are basically the profits from the investment portfolio that Zerodha has made in gold and equity as a company. And if the unrealized gains are added, the operating margins could hit a whopping 69%. Another interesting point to highlight is the assets under custody by Zerodha. If you see the image on the screen, Zerodha's total current assets under custody, which is the total assets held in their Demat accounts, stands at a massive 5.66 lakh crores. This impressive rise in Zerodha's asset custody was due to the bull market in India, the increased retail participation, and the super hot IPO market. But have you ever wondered how Zerodha makes money? Like trying to understand its revenue model? Don't worry, I've got you covered. So Zerodha's revenue can be summed up in the following ways. Firstly, Zerodha charges a fixed fee for intraday and futures and options tradings. As we mentioned earlier, it charges a maximum of 20 rupees for every transaction, regardless of the value of the transaction. Second, Zerodha has built its business with the objective to draw a lot of transactions on its platform. By providing high quality services at competitive price, their goal is to make money from the sheer number of trades. Despite charging a set fee, which is minimal, it rakes in huge amounts of money with millions of transactions daily. Third, Rain Matter, a subsidiary of Zerodha, acts as a startup incubator in the Indian ecosystem. Through this, Zerodha has invested in 31 fintech companies, 23 health and fitness, 27 in climate, and so on. Profitable businesses like Cred, LearnApp, Smallcase, Streak, TradeLab, and so many more provide revenue to Zerodha in different ways like equity investments, revenue sharing, contracts, or acquisitions. Moving on, TrueBeacon, a subsidiary of Zerodha, is a wealth management firm that offers a variety of investment products and services like alternative investment fund, portfolio management services to high net worth individuals and ultra high net worth individuals. It was founded in 2019 by the younger Nikhil Kamath. Lastly, Zerodha also recently launched is Zerodha Fund House, a relatively new entrant to the Indian mutual fund industry, but it has quickly gained a reputation for its innovative approach and commitment to investor-friendly practices. It offers a range of mutual fund schemes, including index funds, equity ETFs, liquid ETFs, and gold ETFs. Now let's talk about the challenges at play. But before that, let's largely understand the groups of investors, traders in the market. As you can see, traders or investors can be categorized into three groups. Group 1 accounts for equity investors, and they account for 1% of the total trade volume. Group 2 are the intraday traders, accounting 9% of the trade volume. And the last group are the future and option traders, accounting for a massive 90% of the trade volume. And Zerodha has built a platform for serious F&O traders, that is Group 3. The strategic move to focus on Group C users helped Zerodha multiply its profits year over year. But however, the road ahead is bumpy indeed because the broking industry is highly sensitive to regulatory changes. To protect investor interest and cut down on speculative trading, SEBI made a bold move to curb the exposure towards futures and options trading. They've come down hard on the derivatives market by announcing a series of measures like increasing the minimum contract size to 15 lakh rupees, upfront collection of premium, limiting the weekly expiries, and several others to curb derivative trading. And this move by SEBI hit hard with all the brokers, especially Zerodha, that derives a majority chunk of its revenue from the trading activity that happens in F&O trading. And while all brokerage have seen a volume drop of 40 to 60%, Zerodha reported seeing a drop of 60% in trades. Nitin Kamath expects 30 to 50% drop in revenue with the SEBI measures in play. And in a recent tweet, Nitin Kamath mentioned that once the minimum contract size increases to 15 lakhs, which is effective on November 20th, Zerodha will decide a change on the pricing structure to tackle the issue. And these are not the only regulatory hurdles. In the Union Budget, the Finance Minister announced an increase in the securities transaction tax for the F&O segment. SEBI also introduced changes in norms related to Basic Service Demat account, also BSDA. The reduced account maintenance charges charged by brokers has reduced, thereby reducing a drop in revenues. Apart from the regulatory hurdles, Zerodha faces stiff competition from rivals. In the same space of investment tech and discount broking, several players have emerged like Groww, Upstox, Angel One, and several others. And one player is taking center stage, which is Groww, which overtook Zerodha in terms of active clients with 6.63 million back in October 2023. If you see the image on the screen, Groww has leaped ahead and taken the first spot with 1.18 crore active client base, followed by Zerodha at 79 lakh, and then comes Angel One as of August 2024. But in terms of financials, Zerodha's revenues and profits are far superior, racking in 4,700 crores of profit in fiscal year 24 as compared to the 298 crore profit of Groww. But as mentioned earlier, Groww has the upper hand in terms of active investors to the tune of 1.15 crore investors. The reason behind this is Groww's products do not cater to the F&O segment but to equity investors, and barely 15% of the clients trade on the platform. But what about the road ahead for Zerodha? The entire broking industry is highly sensitive to the regulatory changes, and Zerodha have acknowledged it and have been building other businesses and revenue streams. Zerodha, known for revolutionizing the brokerage industry in India, is now actively diversifying its business in the following ways. Firstly, they're launching margin trade funding or MTF, providing more options beyond derivative focused products. MTF basically helps the client purchase more shares than with the available cash in the client's account to the tune of 5x of the funds. For this, Zerodha would charge interest charges, brokerage, pledge charges, square off charges, and all other government charges. Second is the portfolio of stocks, bonds, and gold Zerodha holds with its own funds. Additionally, private market investing through Rainmatter, as we discussed above, Zerodha owns stakes in over 120 companies, providing them additional income. Third is Zerodha Capital. With this, Zerodha would provide loan against securities and currently have a book size of about 300 crores. For this, a flat annualized interest rate of 11% per annum is charged, subject to the prevailing economic conditions. Next is Zerodha Fund House that we discussed earlier. Being India's only passive AMC, it has amassed more than 3,000 crores rupees in assets under management. Well, apart from this, they have partnered with Ditto, an insurance distributor, and several other applications like Sensible, Streak, Tijori that generates revenue through its subscription model. Now you might be wondering, why not a Zerodha IPO? To tell you in simple terms, Zerodha has no pressing need for an IPO because its financial strength and growth have been built entirely on its own profits. Even Nitin Kamath says, why take on the burden of expectation from investors when there is nothing strategic or material to gain for the business? Once listed, most companies are forced to shift their focus to growing quarter after quarter at all costs. Their core philosophies, culture, and the way of running their organization are based on long-term customer-centric decisions, and hence staying private aligns in the best interest of Zerodha. Now, to conclude Zerodha's incredible journey, the company's rise from humble beginnings to becoming India's largest brokerage has been nothing short of remarkable. By focusing on customer-centric solutions, low-cost trading, and financial education, Zerodha has disrupted the traditional broking model. Its commitment to staying private underscores a long-term vision of building sustainable business and prioritizing customer value over short-term profits. Zerodha's ability to adapt and diversify its revenue streams while maintaining financial discipline ensures it will remain a key player in India's financial landscape for years to come. This isn't the end of Zerodha's story, but rather the beginning of its next chapter. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.